Good morning, good afternoon, good evening. You are watching the Paris Fintech Forum Communities video interview series. I'm Elliott Gotkine, and today I'm joined by the co-founder and CEO of Griffin.
Thank you, Elliott. It's a pleasure to be here.
Okay, so before we get cracking, we're going to learn a little bit more about Griffin. So, David, Griffin, it's a one-stop banking as a service provider. Along those lines, what does that mean in practice?
Yeah, so we think of it as full stack banking as a service. And what we really mean by that is the ability for people to get everything that they need in one provider, which is valuable, particularly because most of the things that you need to offer a financial service all share the same data model. And so if it's not coming from one place, you're going to spend a lot of time stitching all of that data together. And so we think that there's a lot of value in being able to operate a single unified platform and product experience.
And so just for context, maybe give us a sense of who your competitors are, who some of your clients are.
So we principally sell into the payments and wealth space. So generally looking at regulated non-bank financial institutions, but we also do provide services to unregulated firms that maybe are interested in offering something like an embedded savings account within various sort of vertical SaaS type applications. Competition-wise, it's not a hugely competitive market, and I would say most of our competitors are not what you would think of as sort of doing the full stack positioning. But in terms of satisfying that minimum requirement of safeguarding client money accounts, white labeled interest-bearing accounts, Clearbank is probably our primary competitor in the UK.
Okay, because of course you do actually have a banking license now, don't you?
That we do. It's been a long journey, but we are now a fully authorized baby bank in the UK.
Okay, and I guess for fintechs as a whole, it's not perhaps been the easiest of couple of years, what with the fallout in fundraising and everything else, rising interest rates and rising risk in terms of geopolitics and the like. Some of your rivals have even actually fallen by the wayside. How has it been for you?
I would definitely say it's been challenging. It hasn't been an easy ride by any stretch of the imagination. On the other hand, one of the nice things in some ways about a higher interest rate environment is that investors are a little bit more focused on investing in quality businesses. So my cautious hope is that there will be fewer last mile delivery startups, fewer, scooter startups raising hundreds of millions and then going bust, more firms that are actually solving real problems, raising capital. And of course, the other side of that is that as a bank, our business model does benefit to some degree from a higher rate environment. And so that's also been helpful for us and provides a clearer way for us to deliver value to our customers in turn.
And in terms of customers, can you give us some thoughts on Griffin by the numbers, maybe money raised, customers, path to profitability and the like?
We've raised, about 50 million pounds. It's a little bit more than that by now. I can't give any details on sort of customers and volumes, but it's not huge. I'll just sort of reiterate, we were fully authorized less than 4 weeks ago. So we're very, very early in the kind of taking customers live, ramping our volumes. I wish I could share where I wish we were and where we are today, but I think that's going to have to come out in the wash in about a year's time.
Okay, well, by the time this is broadcast, I'm sure it'll be more than 4 weeks, and also your size and the number of customers you have will be that much bigger. But okay, so we've heard now about Griffin. Let's now learn a little bit more about David. So, David, I think your background is more in software, and now you're in finance, I guess, where finance and software meet. Why did you choose to make the shift into fintech?
So about a decade ago, I found myself working for an early banking as a service business that was too early to market and unfortunately unsuccessful, ended up being acquired by Silicon Valley Bank, RIP. But it left me with incredibly high conviction in the market opportunity. And I didn't necessarily think that I was going to be the person to execute against it. But after then spending a bit of time still working as a software engineer, I just found myself really stressed and miserable, is the honest answer. And I didn't really think I could go and work for anyone else. And so, lacking anything else that I could possibly do, my wife reminded me that there was nothing stopping me from doing this. And so here we are.
And you didn't just make the shift from, I suppose, broader software to finance and fintech. You also moved yourself and presumably your family from the Valley to the UK. How has that move been, and what's been your best and worst experience of being in the UK compared with being in the Valley?
Yeah, good question. So my mom is English, and I live in Bristol, which happens to be where she was born and grew up. So it's not a completely foreign country to me, but it is definitely very different. I'm a type 1 diabetic, so I think the main thing that I can say that is different that I love is the NHS, right? So the fact that I don't have to work in order to have access to the medication that keeps me alive is a pretty big deal. And I do think is an amazing enabler for entrepreneurship broadly, because like if I, in the US, if I ran out of cash, that would be it. I would just have to go and find a job. I wouldn't be able to sort of be founding and running a company. So that's incredible. Challenging. I live in a Georgian home that I bought about 2 and a bit years ago, and it's very exciting to live in a home that is almost as old as America. It is also very expensive when anything goes wrong. So yeah, learning about listed property maintenance has been not my most delightful journey.
And I think if you said you were miserable and I think stressed as well when you're working for software companies, but of course now you're running a company, you founded a company, you're the CEO of a company. That must be pretty stressful too. How have you made the transition from being an employee to being an employer?
I would say the first couple of years were very stressful because we didn't have any money. And so slowly going broke and spending all of your life savings is a little bit stressful. Ever since we've had enough money for us to actually do the thing that we wanted to do and have a team of people, it's hard. It's very odd to say, but I find it really fun. I wouldn't say it's relaxing, but it is less stressful to be in control of your own destiny, or to at least be the author of your own destiny in some ways. So I find it's a much more natural fit for my personality. It turns out I really, really don't like working for other people. So given the opportunity to not do that, I'm just much happier.
And one of the other things you like when you're not focused on Griffin, I understand, is painting miniatures. Can you tell us a bit more about that hobby? I'm not sure how big it is in the UK, but I know I've seen it on movies and the like, but tell us a bit more about this hobby of yours.
Oh my goodness, Elliott, it is hugely popular in the UK. It's actually quite funny because I collect and paint Warhammer 40,000 miniatures, which it's unquestionably like a really nerdy thing to do, and it is actually a very English thing to do, because the company that produces them is a British company. And when I was growing up as a child, these were always very cool, but sort of seen as quite nerdy and esoteric. But it turns out that the company that makes these is public and wildly profitable and has been growing like crazy over the last couple of years. I think largely since they discovered YouTube and figured out how to kind of beam this directly into people's homes. But I find that it's my kind of mindfulness activity. It's very relaxing. It forces you to be very present. It can be challenging to do when you have 2 dogs and a kid around, because you do need to find a bit of time and space away from everything. But it's nice, and unlike playing video games, you're sort of left with a physical artifact of your hobby afterwards, which I think is really wonderful.
Right. I guess it's, part of this whole almost, as a friend of mine's book had it in its title, The Revenge of Analog, where kind of, with all of this technology, and whether it's social media, video games, TV, streaming and everything else, it's sometimes much needed to have, a counterpoint to that in the real world with something physical to do. So very interesting. But now we've heard about you, we've heard about the company. We're now getting to the key part of this interview, which is to get your take on the future of finance. But first, we're going to take a very quick break, after which we're going to continue our conversation with Griffin co-founder and CEO, David Jarvis. Welcome back. And don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. And now, David, let's talk about the future of finance. And of course, no discussion about anything technology related these days, certainly not this year, could be complete without talking about the impact of artificial intelligence. What impact do you see it happening in your industry, the banking industry, and what impact do you expect it to have?
I have to say, I don't really have a hot take on artificial intelligence yet, which is it's a consequence of two things. One, I'm very comfortable admitting when I don't know something, but also my wife runs an artificial intelligence startup, and so if I say something stupid, I'm really going to get it in the ear. So it just makes a lot more sense for me to wait until I have something intelligent to say on the subject.
Oh, well, maybe we should get your wife to join us, because I had a couple more questions about AI. I mean, presumably as a fintech, you can't go to investors without talking about the way that you're using it, or the way that you're planning to use it, or the way that it's going to enable you to revolutionize the particular part of the industry that you're in. No, nothing. Didn't even talk about it.
No, honestly, I mean, I think I have some spicy takes about investors in general, but they're not stupid, right? And so everyone is telling them about how they're going to use AI. And most of the people who are saying that do not actually have a credible plan on deploying it in a way that is actually value additive. And so I think particularly when you are at the sort of infrastructure layer, it is harder to see how you can deploy AI in a way that is sensible or value additive. And so, in some ways, it's like thinking. I often use the kind of analogy of utilities, right? If we were a water utility, why would you expect us to be deploying AI to provide you water better? It just doesn't necessarily make a ton of sense. And obviously, yes, there are kind of applications around the edges where you might be able to, I don't know, predict areas where you might have sewage leaks or what have you. Very topical for the moment with Thames Water in the news, but at least at the moment, we're really just focused on building the core infrastructure. And if places emerge where we think AI could be deployed usefully, then great. We're very happy to use that. But it's not otherwise a kind of critical pillar of our strategy.
And it's not something that customers, because you are, of course, providing technologies to other neobanks, other fintechs, other, finance providers. Do they not come to you requesting kind of, AI driven services or anything like that? Or they just want to just get the products out the best way they can? And if that includes AI, great. And if not, so be it.
Ultimately, if someone comes and talks to us, they are talking to us because what they need is a banking service from a regulated bank. And so I don't know about you, but I don't go to, I happen to bank with Monzo. I don't go to Monzo and ask for an AI enabled savings account. All I need is a savings account. That's really it. So at least at the moment, that's where we are. That might change, but I'll kind of I like to there's a quote from Matt Kohler at Benchmark that I'm just absolutely obsessed with, which is the sort of idea that our job is not to predict the future, it's to see the present with clarity. And in the same way, like I don't try and build things that people might want. I just listen to what people tell me they want today, and then try and give them that.
Okay, well, one surprising thing, or at least surprising to me, that customers seem to want, at least in the United States, is bank branches. I don't know if you saw, there was an interesting article in the Wall Street Journal earlier this year talking about how, yes, banking is going digital, and yet America's biggest and most successful bank, JP Morgan, is planning to add another 500 branches in the next 3 years, which is more than most banks in the US have already in total. And that would seem to fly in the face of this kind of desire for digital services and the like. What's your take on the fact that branches are not only surviving, but in some cases thriving?
I think it's really interesting. I do think some part of that is the consequence of America being a very big country with a lot of rural space where, yes, people are digitally connected, but in order to actually understand your customer, you do have to spend time with them in person and build a relationship. And I think part of that too is the old American paranoia about government makes it, and about really anyone, makes it surprisingly difficult for sort of centralized data registers to exist that facilitate service provision. And so, like again, if you don't build that relationship in a kind of direct and organic way, it can be quite challenging. But I'll be honest with you, I didn't know that. I'm quite surprised to hear it.
I guess we'll see. They obviously know what they're doing, I guess, given how successful they've been over the last few years. We talked a little bit earlier about the last couple of years being a little bit challenging, to say the least, for yourselves, for fintechs in general. Have things now turned a corner? Have things bottomed out? Or is it now just sunlit uplands ahead, or are things still very challenging out there?
So I think the public markets are always a mirror of the private markets, or what happens in the public markets trickles down to the private markets. And so the fact that things are going absolutely gangbusters in the public markets is definitely good. On the other hand, the pullback from the LPs into venture and into growth capital generally is going to take years to actually wash out through the rest of the system. And I think we still have a lot of sort of zombie companies who are in the process of slowly dying, and you also have quite a few companies that raised in 21 that are now that maybe did a bridge round in sort of 22, 23, and they're still desperately trying to hold on to the old valuation. And my impression from talking to investors is that quite a few of them would just rather not touch a company that is so far off its last round. So I think we still have a bit of pain. As I said earlier, I think good companies are always investable. But I think the challenging thing is that the to have that flood of capital sort of infused in the system and then to have it be pulled back so dramatically, we're still looking at the after effects of that.
And as we mentioned earlier as well, you're an American, although half British, and you are based in the UK, and your fintech, Griffin, is based in the UK as well. Are you optimistic about the prospects for the UK economy?
Interesting and challenging question for me to answer. I have to confess, I do tend to sort of keep my head down a bit. What I will say is that I think the UK, as a fintech hub, is like an incredible, bright and shining star for the broader European tech ecosystem. I think fintech in the UK is a remarkable success story. It is genuinely hard to imagine running this business or being able to build this business anywhere else. And so I remain sort of incredibly, incredibly bullish on the UK's fintech sector and technology sector more broadly. As for the rest of the economy, I gotta say I'm no better than your man on the street.
And just on that point, would the UK, if you were starting from scratch, you were looking, do I start this in Silicon Valley? Do I do it in New York? Do I do it in Paris? Do I do it in London? You would still plump for London. This would still be the best place to set up the fintech, because certainly in the wake of Brexit and the like, which I'm sorry to even mention, if there were a lot of founders that we spoke with who would say, well, you know what, maybe if they knew now what they knew, if they knew then what they knew, if they knew more about what was going to happen versus what they thought was going to happen, then they might have, set up their fintechs somewhere else.
So we started the business after the Brexit vote had happened. So we had some visibility into that already. We obviously couldn't have known how things would ultimately play out. But yeah, I mean, if anything, I think it's a better and easier time to start fintech in the UK than it has been at any point in history. There's more capital available. There's a larger network of operators, founders, talent, customers. The regulators are, I know that some people like to gripe about it, but our experience has been they're very switched on. They do understand, the companies that they're regulating and overseeing, and are interested and open for business when it comes to sort of new, innovative business models. And so, yeah, not only would I not choose somewhere else, I think I'd probably have an easier time if I was starting it now relative to when we did start it.
Okay. Well, it's time now, David, for our round of rapid fire questions. Are you ready?
I don't know that I'll ever be ready, Elliott, but let's see where we go.
Okay, so I'm going to put 90 seconds on my clock on my phone, and we'll try and get through as many as we can. One word answers is all I'm after, and I'm just going to start the clock in just a minute. When the alarm goes, we will stop. Okay, away we go. So, what fintech segment has the biggest potential over the next 5 years?
Payments.
What is the biggest pain point in your everyday financial life that you'd like to see resolved?
Tracking wealth, probably.
Are bank bosses or fintech founders ready for the AI revolution?
Clearly not.
Customers, are they ready for the AI revolution?
Definitely not.
Do you think EU and US regulations have kept pace with all the new possibilities and behaviors in the financial industry?
Yes.
Have you personally ever invested in crypto?
Yes.
Are physical points of sales part of the future of finance?
Yes.
Are bank branches part of the future of finance?
No.
On a scale of 1 to 10, 10 the most likely, 1 the least likely, how likely is it that one of the neobanks will be as profitable as a top-tier legacy bank in the next 10 years?
10. 10.
Okay. And on that optimistic, some might say, note for neobanks, we've run out of time for our round of rapid fire questions and for our conversation. So I really just want to thank you, Griffin co-founder and CEO David Jarvis, for joining me today. Thank you so much.
Thank you, Elliott. It's been a pleasure.
And for everyone watching, we will be back again next time with another big name from the world of finance and technology. We do hope you'll be able to join us again then. In the meantime, don't forget to subscribe to the Paris Fintech Forum YouTube channel and to follow us on Twitter at Paris Fin Forum. Of course, it's now called X, but you get the picture. Bye for now. See you next time.